Hey, welcome back, everyone. It is time for another red hot cover call video. Well, hey, look, I'm back behind the mic, absolutely fired up. Had a little vacation in the great state of Oregon. Got to see my oldest son and love me some Bend. Tell you what, when I retire from the 9 to 5, I might find myself in Bend, Oregon. Absolutely love it. Well, hey, look, today we're going to talk about how I would afford such a move. We're going to talk about two things. One, I'm going to show you my recent Square poor man's covered call trade. If you remember from last week, I was in deep trouble for which the stock had rocketed past my strike price, and it was truly some $10 to $12 above my strike price. And I was going to have to make a decision. I showed you in that video that I was boxed in with Square. The markets bailed me out. I was able to make another trade. I'll give you an update on that. And we're going to talk about using a long-dated put to generate monthly cash flow. Yeah, we're going to use a long-dated put, maybe a year out. We're going to sell that put. We're going to generate that income up front. We're going to divide it per month as monthly income in retirement. Okay, so we got a lot to talk about here because I'm very excited to share with you my thoughts using that long-dated put, generating real cash flow every single month. I'm doing it now. I let the members know what I thought was a great idea. I'm going to share that with you right here. Now look, if you've never been to my channel and you like what you hear today, subscribe to the channel. It's right there. It's free. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. Now, what we're doing is this. We're talking about that Square trade for which it's a poor man's covered call. I went ahead and bought a deep in the money Leaps call option. If you remember, I bought this at the beginning of the year when Square was trading at around $180. Well, Square has fallen since then, just like the rest of the market, and I'm really in a bad spot with my Leaps call option on Square. That doesn't deter me. Its purpose is to generate monthly covered call income. So that's what we're doing. Now, the last covered call I wrote on Square using my Leaps call option for the poor man's covered call, I priced my strike some $30 out of the money. Probably used a 19 delta, never thinking that I would have that strike challenged. Well, with these high-flying stocks, anything can happen. This is why I always recommend that you use steady Eddie S&P type companies that trade sideways to higher, because you really don't want these stocks to jump $30 and $40, because if you're down, right? If you're down, just like you own the shares, if you're down, well, you're going to have to unravel the poor man's covered call trade. And quite frankly, you're going to lose money if you have to buy back your Leaps at a considerable loss. Makes sense, right? Well, that's where I was last week when Square was trading at about 103. And I sent the members this email right here. I said, with Square trading at 103, I sold the 130. I mean, literally about $30 above where the stock's trading. Now, I'm just looking for a little crumb. So as you can see, I pick up a $1.79. It's a deep out of the money strike. What happens next is this. We get some news. Square has some earnings. Stock is popping. It's moving with the markets. Turns out that it goes above my strike price of 130. I'm going to show you here on the charts where it went, and I'm in a bad spot because if I add all of that cost basis to this trade, well, I'm going to have to make it up later. Now, remember, it's a Leaps call option, so I am restricted by time. It's a January 2023 Leaps call option that I'm using for the poor man's covered call. Well, Square is trading for $1.40. So what's happened here is I'm going to have to add $10 to my cost basis if I'm going to buy it back, close the trade, and do another covered call. Well, we're not going to do that. That's just too much cost basis add here. So for me, what I'm going to do is this. I'm going to wade this out. I'm going to wait for that expiration. And if you notice, it was April 8th. Well, let's go to the chart and I'll show you exactly what happened. The markets ended up bailing me out and we're keeping this trade going. And now I've written another covered call using a strike that is $30 above where the stock's trading now. Well, back when it was trading at 103, I actually thought it might give us a little upward action and really play this line right here. I thought this was the new resistance in the short term. Turns out it broke through that resistance and now it's playing up here. One thing you need to notice, it's above a 140 here. Well, you know my strike price is 130, so I'm in trouble if I let this trade go to expiration. Well, I didn't want to take action because the option that I sold for a $1.78 was trading for well over $11. I'm going to have to buy this back. I'm going to lose serious money. Well, I've already decided I'm going to let this trade expire. I'm going to lose on this trade. We're going to wash our hands of it. We're going to move on. However, if I wait till April 8th, maybe the markets will work in my favor. And look what happens. It sure does. It peels back to where it trades under 130. And I'm actually able to put in a bid to buy it back for $2. Now remember, I received $1.78. So we end up losing money on the trade. But do understand, this is literally like $42. This is nothing compared to the thousands I was going to use. And what did I end up doing? Well, I ended up writing that 160 out of the money strike when the stock started to pop. And sure enough, look where it's at now. It's some $23 higher from the last covered call I did, and my strike is over $30 from where it's trading today. And we're going to play this game because if I can manage this trade, this is a cash cow in the sense that as Square recovers, if I could pick up anywhere between $2 and $4 per share in premium and I don't have my strike prices challenged, this will generate me thousands of dollars in income. Hell, it already has generated some 12.5% on my covered call income. So right now, what I need to do is manage these trades. Now, do understand, I let this go one day before expiration because I didn't want to do this too early in the game because sure enough, it came back and it became a favorable trade for me. Had I bought it back here, I would have added $11 of cost basis. Stock falls. Well, I still have that cost basis I added to the trade. By waiting, I was able to catch a break, only pay 22 extra cents versus what I got and what I paid. That in the bigger picture of this trade is unbelievable. I was able to buy that back, not have to get rid of my Leaps call option. We're going to keep writing covered calls. A lot of people have been asking me, you're down severely on this trade. I paid $88 for the Leaps call option I'm using here for this poor man's covered call. It's now trading for around $55, $56. I'm down some $30 on the Leaps call option. Well, here's the deal. Think of it this way, because if you don't think of it this way, you're absolutely going to be crushed when you think I paid $88 and it's now worth $55. Remember that if this goes to January 2023, we get at expiration, and as long as Square is trading above my strike price of $80, it's going to be favorable for me to assume the shares. Okay, right now Square's probably down 25-30% from where I got involved. My Leaps call option is down double that. Do understand that at the end, January 2023, the worst case scenario is I have to take ownership of the shares at 80, and depending where the stock's trading, hopefully it's over 80, I'm going to own the shares just like any other share own. Now, hopefully along the way, I've sold covered calls using less capital, making more cash on cash percentage gain. We'll have to see how this plays out. I will keep you posted. Now, if you want to be a part of my membership, I'll tell you what, I got a 1 free month offer for you. Go to my website, cptdashboard.com, click Upgraded Dashboard. Look what we sent out today, talking about HP. Love a poor man's covered call on HP right now. I might even do this one as well. Absolutely a great opportunity to pick up some 12% if our shares are taken away. Let's go ahead and talk about selling that long-dated leap, making income in retirement. Now, I sent this out to the members talking about, does selling a long-dated leap make sense looking to generate income? Now, most people would generate income by buying a closed-end fund or buying those stocks that pay 3 to 4%. Well, I do too. I love my closed-end funds. Have about 5 of them generating cash on cash, monthly cash flow for which I can use in retirement, pay the bills, live the good life. Well, how about using a long-dated leap? And I'm going to talk about what I have done and what I'm doing now. This is really just to pique your interest. If this interests you, this is where you need to be a part of my membership, because I want my members to not only think about the trades, but I want them to start thinking about income, because income will be the lifeblood of our retirements. Okay, if you don't have a pension, right, you're gonna have to use your 401k to generate income. All right, and chances are the 401k is not going to generate enough dividend income, so using the selling premium strategy might be that bridge between having enough and not having enough. So, what about using a long-dated leap? Now, what does that mean? It's a cash secure put. I'm going to set aside money, give somebody the right, but not the obligation, to assign me their shares at a price I pick for a time frame I pick, which is going to be about 6 months to a year away, and they're going to pay me a per share premium for keeping this cash on the sideline. Now, if you've been watching my channel, you know I love the 3X leveraged ETFs to the indexes. And in this case, we're talking about the TQs, which is a leveraged ETF to the NASDAQ 100. Now, the TQs is trading at the bottom of its trading range because the entire market is down. Okay, so this is the time John is interested in selling a long-dated put option. If I said leaps before, what I'm talking about here is writing a cash secure put, right? We're going to hold this paper for 12 months, giving somebody the right to assign me their shares at a price I pick, but they're going to pay me upfront big money. And in the case of the TQs, I did this. I picked a 52.50 strike when the TQs was probably trading around 52. I went ahead and did the January 2023. This is around a 12-month trade. When you do the math on a $16, look at that, a $16 per share premium, that works out to be cash on cash 30% for 12 months. Now, the way I see it, it's an income play. I'm literally setting aside the money, just like I set aside the money to buy the closed-end funds to pay me the 10 cents per share per month as income. Well, in this case, I'm getting the money up front. So when I invested this money and collected the $16 per share, I was able to make $4,800. You see it right there. I did 3 contracts. I received $4,800. That divides out to $400 a month. But here's the deal. I only used $15,750. Now, granted, I am using a 3X leveraged ETF, but again, it is to the index, and currently, all the indexes are trading at the bottom of the range. So what I'm betting on here is that the markets will trade sideways to higher over the next year. I'll never be assigned the shares. This is why I'm going to use a portion of my portfolio to sell a long-dated put, and what I'm going to do is collect the big upfront premiums. I'm going to divide it out by the months that I have the trade on, and that's going to be my cash flow in retirement. And I'll tell you what, I can do it with less money. Now, again, we're selling premium. So when we sell premium, we have flexibility in that I can actually roll out of this trade later. But think of it this way. I sold the 52.50 strike, right? They paid me $16. So really, worst case scenario is what? I don't use that $16 per share as income. I have to use it for cost basis reduction. Do the math. Now I'm not holding the TQs at 52.50, right? We don't want that to happen. That's why we do this at the bottom of the cycle. This is what I wrote to the members talking about, does it make sense? And if you're looking for income, if you love selling premium like I do, using the long-dated cash secure put could be a great opportunity to generate income paid up front versus a closed-end fund that pays you every month going forward. Let me show you on the chart how I'll play this trade if the TQs goes higher. Now let me show you this trade because I actually did it. Yeah, that's right. I talked about parking money, and I parked at $15,750 for about 12 months. As you can see, I did this trade back in January, and I feel the same today as I did then. Using the opportunity to use the long-dated put allows me to collect fat upfront premiums. We're going to divide that out by the time frame that this trade is on, and notice, worst case scenario, if I'm assigned the shares at $52.50, which means the market hasn't moved in 12 months, which actually isn't a good thing, my cost basis would be $36.50. Now, for me, this is a 30% cash on cash percentage gain, but more importantly, it's $400 a month. See, this is what I show my members. I let them see the world through my eyes. I don't take days off. I'm always looking for the next best trade and upping my game using these kind of strategies to generate income in retirement. Hey, live the life, pay some bills. Now let's go to the chart. I'll show you exactly how I would play this if the TQs goes higher. I'll tell you, every single day I send something to the members that I believe ups their game. I think we were talking about the poor man's covered call using leaps versus owning the shares. I gave my take on why I like the leaps option versus owning shares. In some situations, definitely allows us to make more cash on cash percentage gains using less money. See, these are the things I send to the members. Need you to get on board. I'll give you one free month. Now here's the deal. As the TQs falls, well, we know the markets are falling, right? The TQs is a 3x leveraged ETF to the NASDAQ. So I'm not betting on an individual stock with individual management with people. This is the NASDAQ 100. Now, when I sell this long-dated put right here, this is where I believe the bottom is. We get a little bit of a bounce here, but when I sell it right here, they pay me $16 fat dollars. That's $4,800 divided by 12. That's going to be $400 a month. As the TQs moves higher, because as the market will move higher, this $16 will fall because the likelihood of it finishing at $52.50 is unlikely. So this number will turn into $10, $9, $7, $5. You get the point. And what I'll be able to do is buy this option back. Now, if I'm going to use it for income, I'm not going to touch it. I would let it expire. But because I don't need income today, as this option falls, I'm going to go ahead, pick a number, and I'm going to buy it back when that $16 reduces all the way down to $5. I'm going to pay $5 and I'm going to keep the difference. Because what I like to do is keep the plate spinning. I'm definitely going to then use that $17,750. I might even buy TQs at that point and sell a 30-day covered call. But my point is this. We do this at the bottom of the cycle, and what we do is look to collect the fat premium for the long-dated put. We can use that for monthly income. And if that's how you're going to play it, that is all right with me. Because here's the deal. When we get to January, this hopefully will expire worthless. They won't assign you the shares of $52.50. You've kept the $16 in your pocket. You'll get that cash back, and you could do it again. Now, if you want to get my next email I'm sending to the members tomorrow, I need you to go to cptdashboard.com, click Upgraded Dashboard. I'd love to welcome you aboard. Hey, look, we're going to talk more about generating monthly cash flow in 2022 and 2023 because, God willing, I'm retiring at the end of this year, and it's all about monthly income. Whether you're living life today, you're in retirement tomorrow, you need cash flow, and that's what we're going to talk about. So I want you to stick around, subscribe to the channel, and hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. Be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.